Hello, everyone, and welcome to the Invest with Nikki podcast, where we talk all about real estate, wealth building, and how to build your fire so you can build financial independence, so you can retire early and enjoy more time with yourself and your family. Today, we're doing a little bit of a different episode. We're doing From the Desk of Nikki. And this was actually inspired by my social media team that actually helped me put together all of my social medias and my podcast. I can't do it alone. So, huge shout out to them for really always helping cheer me on, keep the energy going, keep our shows going, and do all the behind the scenes work so that I can, shine and talk to you guys every single week. And, this is really a cool way for us to connect one on one. And I would love to know from you, what do you want to hear more of? And what do you want to hear me talk about? What resonates with you? Maybe some things that we can leave to the side and forget as well. But this is just a great opportunity for us to connect. And we'll be doing these, maybe one time a month. We'll do a From the Desk of Nikki, just kind of real, raw, like what's going on in my world and what I'm up to and what I'm seeing in the markets right now. So, gonna dive in on our first topic. And right now, we're going to go into what is the state of the short term rental market right now. These are my honest observations, what I'm seeing, what I'm hearing. And, a few things right now is number one, you've kind of got this bit of maturing happening post COVID. And so, I've been in short term rentals since 2005, and it was such a strong business back then, but it was kind of like almost underground. And then whenever COVID happened, money was so cheap, and investors started to really realize that you could get incredible tax benefits from buying short term rentals. So people bought up short term rentals like crazy, and they did no underwriting, no analyzing. They literally just went and paid overvalue because money was cheap. Values were rising fast through COVID, and properties in Florida at least were like 100% booked through 2020, 21, 22 because everyone was traveling here, and they couldn't go into the blue states. They could come to Florida and they could live their life and not have to be masked up, and actually could like enjoy life and be outside and be at the beaches. And so we were 100% booked through COVID, and it was just insane. And then what happened is the market kind of corrected. you know Markets opened back up, property, prices started to come down a little bit because people weren't paying, 20-30% over ask. And the short-term rental demand kind of went back to like a pre-COVID level. Now, when I say pre-COVID level, they actually were stronger than pre-COVID numbers. We had higher average daily rates, higher occupancy than 2019 and beyond and before, but it wasn't the highs of what we experienced through COVID. And so, we've had this kind of market correction, right, where property prices are not cheaper than pre COVID. That's some one distinction to make. That has not happened here in Northeast Florida. They have returned to a normal market level, but they have outpaced the 2019 prices. They're not cheaper, it's just cheaper than the peak through COVID. Okay. So some people over leveraged themselves and then got into short term rentals, didn't really know how to operate, didn't know how to create 5-star experiences, and didn't set up their properties well to begin with. And so now, because you've had this kind of market correction where occupancies hovers around 70%, depending on your property type, and average daily rates have come back down, and you don't have 100% occupancy, then you've got these people that were over leveraged, overpaid, didn't really know how to operate, didn't really optimize and set up design and amenities well from the start, and they're kind of upside down, right? They've gotten themselves into an asset where the numbers just don't make sense. And, when it made sense when they were at 100% occupancy, but it doesn't make sense now. And so they're trying to offload those properties, and they've been sitting on the market. And I've seen people selling for hundreds of thousands of dollars less than what they paid for that asset. And they're desperate to make that move. So I think right now is an incredible buyer's market. We are getting tons of creative finance deals. We are getting deals. Okay. And I'm still buying. I am buying aggressively right now. I have bought a total of 4 properties in the last year. and I'm under contract on another one. So I am personally buying as many properties as I can that make sense long term. And so are my best clients. My best clients are buying 10, 15, 20 properties this year. And it's because they know that this is an incredible time to get a good deal. Now, I don't recommend that unless you know what you're doing. You are a skilled operator or you're committed to being a skilled operator. And I always tell my clients, especially the ones that are new to short term rental, I'm like, if you're not going to do short term rental right, don't do it at all. Just don't do it. And I've actually almost told people to cancel have told people to cancel their contract on this deal that they were going to buy and set up as a short-term rental because I knew they didn't have the right mindset to be successful in short-term rental. You really have to think not only as a business owner, but you have to think as a hospitality um, you know, purveyor, right? You have to be someone who purveys hospitality and shows people that your guests that they can have an incredible time and that the guest is always right and you're going to always make things 100% you know incredible for them, right? Like there's this thing about hospitality where as much as I hate an annoying guest, okay, I had one check in today who immediately points out every little tiny thing wrong with my place and I want to say get the frick out. You can't do that in hospitality. So not only do you have to buy a good asset, buy right, set it up right, design it right, amenitize right, but you have to also operate right and ensure that guests have an incredible time with you. You always have to put yourselves in those guest shoes. So right now it's an amazing time to buy. It's not a great time if you got in and you overpaid and you over leveraged and you really didn't know what you're doing and you didn't start right from the beginning. But it's a great time if you are a skilled operator or you're committed to being a skilled operator and you're actually committed to running this operation like it's a business, then it's a great time to get into the business because what's happening now is because the industry is maturing, you've got where the people that aren't really that serious or don't really want to take the business serious, they're just all kind of getting out, right? And they're floundering, they're getting out, and that's great. We want them to get out. Number one, we don't want people making a bad name for the others in the industry that do want to do it right. The people who are committed to running a professional hospitality business, we want all that fluff to get out, right? It's almost like if McDonald's, if you're looking at McDonald's wants all the bad competition and fast food to close their doors because they make a bad name for fast food. It's the same thing with short-term rentals, right? You need to be able to provide consistency, standards, great operations, a great product, good accounting, good marketing, all the things that make a business run well. You need to do that in short-term rentals. So right now, great time if you're a professional operator or you're committed to being a professional operator. It's such a juicy time to buy properties because there are so many deals and there are so many desperate sellers that want to get out of this business. And so I really love to go in personally. My business model is going in and finding the properties that were already short-term rentals, but like with either operators that are boomers, they've been in the business a long time and they kind of run it really old school. Like they don't use dynamic pricing, or maybe they're using like an Evolve or a Vacasa to run their business. And they're not really, actually the ones running the business. Or maybe they just, I have some people who they've only put their property on VRBO or they've only put it on Airbnb and they really don't know what they're doing. They have the same rate for the same day of the week for every month of the year, and they just leave a lot of money on the table by not optimizing revenue. I like to go in and find those properties where it's like those either tired operators that have been doing short-term rental, or they just got in and didn't really know what they were doing, but like the bones of the property is good, the setup of the property is decent. I'll probably have to, I always go in and make improvements, but I like to find those a little bit more turnkey, just because I'm busy and I have a lot going on. But then I like to optimize that business. And, most of the time I'm able to double or triple the revenue that they were doing just by putting in my tactics, working the algorithm, optimizing listings, providing 5-star stays, dynamic pricing and revenue, good revenue management, professional photography, professional design, all of those things to really optimize a property. So right now the market is great. We've had some crazy, I just read some reports for July 4th, some record breaking ADRs and occupancies. July 4th was showing crazy demand, and that people are actually choosing short-term rentals over hotels. People are choosing short-term rentals over hotels. And that's crazy to me. Like the tables have turned, and short-term rentals as an industry is really maturing. So I'm super excited about this. I think that this is for someone who's going all in on this. If you're a high income earner and you need to offset taxes, but you also want to build wealth, short-term rentals is number one, the way to go. Promise you that. So that's really what's happening in the short-term rental world. Definitely still a great time to buy. I think that the properties that we're seeing really perform well are the higher end, more luxury or large scale properties. The smaller properties, that are one bedrooms or, smaller, not as high end, are not performing as well. So all of my large properties that hold, 12 people or more, have pools or have, unique amenities, they are crushing it. Like, I am mind blown at how well they are doing. But the ones that are like smaller, not really, they're also competing with hotels, like one bedrooms and condos. Those are competing with hotels. You have to remember that too. But, those just aren't doing as well. So definitely, in a down economy, which some would say we're in a down economy. I don't necessarily feel like that all the time, but in a down economy, that people who have more money are going to still keep spending that money. And that has really proven for me, at least with my personal short-term rental portfolio. And a lot of my clients who are doing the high-end short-term rentals, they're crushing it. I have one client, she is outpacing the competition. The closest competition was doing about 300,000 a year in revenue. She's going to do 450 this year. $450,000, $150,000 more than what her closest competition is doing. So to me, I'm like, well, how far can we go? Like, how good could it get? Like, how good could this really get? How crazy of numbers could we really see when we keep pushing the limits on what type of product we're bringing to the market? Are people going to continue to pay more and more and more? Well, that's really what we're testing. And that's what I really am excited to, share with you guys as we go. So I would say that, you know, a lot of buyers, I've got a couple different buyers. I've got the buyers that want to do like value add properties, and they really want to buy something that is super cheap that they can completely renovate and add a bunch of amenities to, and then do short-term rentals and then refinance it and get a lot of their cash out. I call this like a stir. So you buy it, you renovate it, you rent it, and then you refinance it, get your cash out and go do it again. Have a ton of buyers that do a lot of that. I've learned so much about that. And that takes some project management skills, relationship building skills with contractors. And, obviously you have to negotiate well and do your contracts well and really have a clear scope of work and knowing what you're doing in those types of deals. But then I also have my people who are like starting short-term rentals from nothing. So like they bought a primary residence and now they are turning that property into a short-term rental. So they're furnishing it from the ground up. Maybe they're doing paint, wallpaper, maybe outdoor amenities, fire pit, hammock area, grill area, putt, pickleball, pools, jacuzzis, things like that, and then all the design. And so they're taking what once was someone's primary home and turning it into an awesome short-term rental. So we have those types of buyers. And then we also have people that do turnkey. So a lot of my like really busy professionals that don't have a lot of time and they don't really want to put a lot of energy into this, they like to buy turnkey. So properties that are literally like currently successful operating short-term rentals that we can buy and from day one be cash flowing those properties. Those are a whole set of buyers as well. So, those are kind of the types of, and a lot of times, with the value add, so how we're financing these, nobody's ever paying cash. Everyone is always using other people's money 100% of the time. Okay. And the only cash deals we do are like 1031 exchanges, which we do a ton of those as well. Which, by the way, if you're working with us at Savvy, you do get a free 1031 exchange. So definitely hit us up for that. But How we're financing these is if you're doing the value add stuff, there are lenders that will actually give you the money to buy the property and pay for all your renovations and repairs, and you only have to put 10 to 20% down. Depends on your experience. That's pretty cool. The other way that we typically finance is with a DSCR loan. It's a debt service credit ratio. If you guys don't know a lot about that, go back to the episode with Sean Bailey and I. And he goes all into that. He's my lender that I use for my deals. And the DSCR loans are amazing because as long as you can show that the short term rentals can cover that mortgage, they will loan you the money for that property. So typically, though, you're doing 15 to 20% down on those. That's pretty much how we're funding it. The financing challenges that we have sometimes are, just the speed at which lenders get things done. It does seem like lenders take a little bit longer to get things done these days. You have to really stay on them. But we get them done. We always get them done. Sometimes we have some extensions in there, but we make it happen. So that's kind of really what's happening in the market right now where I'm at locally. I love doing the higher end properties, like 4 to 6 bedroom near the coast, where we can like convert a garage and maybe add a pool, or hopefully it already has a pool where it's like a super quick walk to the beach. We're like east of A1A, which is the highway that's there, at the beach that goes up and down the coast. And those properties crush it. We get them around like 1.2, within a block to the beach, and those are doing 200, 250, 300,000 in gross revenue. Those are killer deals. I love doing those. We can do those all day long. So that's kind of what's working right now in the short-term rental market, like hyper local for me, but also kind of on a bigger scale, bigger picture. I just got back from the short-term rental conference in Information Management Network, put on one in San Diego. And a lot of what the conversations were like, okay, how can we as an industry create standards? Like if you look at the hotel industry has a set of standards. Like, you're going to go get white towels, white sheets. There's going to be 4 pillows on the bed. You're going to have your soaps and your shampoos. You can probably ask the office for or the front desk for a toothbrush kit. What you're getting. There's going to be coffee in the room, tea in the room. You're going to have everything that you need. There's going to be an ice bucket, ice maker. All of that stuff is going to be at a hotel. It's going to be clean. You know exactly what you're walking into. You'll have an alarm clock or a wake up call. You got decent lighting, lots of different lighting options. You've got chargers on the sides, tables. So that's kind of the conversation we're having, a lot of us as operators in the short-term rental industry, is like, how can we create a standard so that when people go to book a short-term rental, they have trust. They know what they're getting. They know that if I book the short-term rental, there's a standard in the industry. And that's really difficult because 75% of all short-term rentals are ran by people who just rent out their ADU on their property, or they just rent out the extra room in their house. There's only about 15 to 20% of all short-term rentals are actually ran by professional operators. So that would be tough to create a standard for the entire industry. However, I know it's something that is necessary so that the short-term rentals have a trust level with the consumer. And that's why everybody goes to Airbnb, is because they feel like they trust it more, right? Because they know that Airbnb is going to stand behind them as a guest. So that's kind of one of the conversations. Some of the other conversations we're having is like about regulations and property owner rights. And, like for example, New York City completely banned all the short-term rentals. And some people are afraid to invest in short-term rentals because they're afraid of regulation. And I would say, you got to just really know what the law is like, what the government is like in those areas, and the culture of, property owner rights and short-term rentals. And that's why I would probably go to a place where they really welcome short-term rentals. Any traditional vacation rental market, if you're worried about regulations, any traditional vacation rental market already has established regulations, and they're not going to change. And those areas you can feel confident because they rely on tourism so much. That is their whole economy. just like where I'm at, my main market is St. Augustine, and I have team that works the whole Northeast coast here and in Florida, Amelia Island, Jacksonville, Ponte Vedra, St. Augustine, Palm Coast, Flagler Beach, Daytona Beach, Cocoa Beach, any of these areas that you want to be in, Orlando, we have people here, and those areas rely on tourism, and certain areas more than others. But if you can go into those markets where they rely heavily, their economy relies heavily on tourism and vacation rentals, you're going to be much safer, right? So it's kind of, that's a lot of the conversation that we're having as professional operators, and just some things that we're constantly talking about. There's also a lot of advocacy, and we are actually starting our own advocacy group as well. So if you're in the Northeast Florida area and you want to advocate for short-term rental property owner rights, definitely reach out. Would love to get connected with you, as we are creating our own advocacy group so that we can really band together and make sure that we protect our rights. So super important. Okay, so some other things I'm doing right now is I've really started working a lot of hotel deals. So really diving head into the commercial world. I've got multiple commercial deals right now pending, some really close to closing, and I've learned so much. So if you guys want to learn more about hotels and commercial deals, I'm actually under contract on one myself that I'm buying. More to come on that. But if you guys really want to know more about that and how that all works, I would love to share. And if you like these from the desk, definitely give me feedback. I want to know if you're liking just kind of real, raw, unfiltered, casual conversations from my office that really isn't even fully set up. This is just a work in progress. I've only lived in the house that I'm in right now like 6 months. So been getting all of this rolling and trying to get this set up as quick as possible so I can deliver you guys more content. But that is my From the Desk of Nikki session today. And thank you so much for tuning into the Invest with Nikki podcast. And I will definitely see you next time.